All right, welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, how to open a retirement trust account at Altruist. This is a warning for Altruist Advisors who may not be aware that you need to have a separate solo 401k plan if you want to take advantage of advanced features, such as the ability to make mega backdoor Roth solo 401k contributions or obtain the 5500 easy support that one receives as a client of my solo 401k financial. This is your chance to get answers. Please use the chat to ask questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. Let's get started. So as always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So let's give a quick overview of where we're headed. We want to talk about why clients and advisors open solo 401k plans with my solo 401k financial. We want to lay the foundation in terms of solo 401k basics, including eligibility and top use cases. We want to go through a walkthrough of opening up retirement trust accounts for my solo 401k financial, because that's the key to be able to have the accounts at Altruist, but have a plan such as the one offered by my solo 401k financial that's going to come with advanced features, such as the ability to make mega backdoor Roth solo 401k contributions, as well as the optional support, such as the 5500 EZ that we offer as an optional free service, the preparation of that 5500 EZ that we offer as an optional free service for our customers. We also want to compare the basic solo 401k plan that's offered directly through Altruist versus obtaining the solo 401k plan through my solo 401k financial and then having the accounts at Altruist. So let's dive in. And again, if there's questions or topics that come up as we go through the slides, please go ahead and chat them over. That way we can be sure to get to them all. And if you've got questions or topics on unrelated topics, off-topic issues, please also feel free to chat those over as well, as we want to use this time to answer your questions. So why clients and advisors open up accounts at Altruist using our solo 401k plan? Well, they want to take advantage of advanced features, such as the ability to make mega backdoor Roth contributions. So with the mega backdoor Roth, clients are going to be able to save up to $70,000 for 2025, or even more if they're age 50 or older, where those funds will end up in a Roth account. It could be in a Roth solo 401k or a Roth IRA. But in either case, just like any Roth account, those funds will have then the potential for tax-free growth. Other top features are the ability to take a solo 401k loan. This is where the solo 401k client can literally borrow from their own solo 401k. It's not going to be considered subject to taxes or penalties as long as it's properly documented as a loan, which we handle that as part of our service for no additional charge and paid back according to the loan terms. In addition, the tax credits. So setting up our solo 401k plan will make the self-employed business eligible to claim $1,500 in solo 401k tax credits. That's $500 per year for 3 consecutive years. So that's going to more than cover our fees for the first 7 years, because we charge $650 as an initial fee. That includes the $525 establishment fee, plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee that covers the second year. So in addition, we prepare the documents within the same business day when someone signs up. We're very hands-on in helping customers and the advisors open up the accounts. As I mentioned, loan document preparation. We handle the 5500 EZ, the Form 1099-R as optional free services for the clients. And then, of course, mandatory plan updates and amendments as the law changes and the 401k documents need to be updated. Now, who's eligible to set up a solo 401k? Well, in simple terms, a solo 401k is for an owner-only business with no full-time W-2 employees. So you need to be self-employed and again, not have any non-owner, non-spouse full-time W-2 employees. So a spouse who's working in the business and reporting the spouse's own earned self-employment income could participate in the plan and would still be considered a solo 401k. Some of the top eligibility considerations include whether or not a separate legal entity is needed for the self-employed business. And the answer is no. We have many customers, for example, who operate as sole proprietors, and that's totally fine. Ultimately, the key is that they are reporting earned self-employment income on their taxes. So, for example, for a sole proprietorship or a business that is taxed as a sole proprietorship, such as a single member LLC, earned self-employment income is income that's reported on Schedule C of the 1040. If the self-employed business is taxed as an S Corp or a C Corp, earned self-employment income is equal to the W-2 wages that the individual receives from their self-employed business taxed as an S Corp or a C Corp. And then lastly, if the self-employed business is taxed as a partnership, earned self-employment income is going to be income reported on line 14 of the K1 that the individual receives from their self-employed business taxed as a partnership. Now, there is no minimum amount of earned self-employment income that would be needed to be eligible to set up a solo 401k. But of course, if the goal is to be able to make contributions, they can't save more than they've earned. So if they have a relatively small amount of earned self-employment income, they're only going to be able to contribute a relatively small amount to the solo 401k. So again, a spouse or business partner, they can also participate in the plan. It would still be considered a solo 401k as long as the spouse or business partner is working in the business and receiving their own earned self-employment income, such as their own Schedule C or their own W-2. The client can set up a solo 401k even if they've got a W-2 job, even if they participate in their W-2 employer-sponsored plan. Again, as long as they've got that separate earned self-employment income with no employees working for any business owned by their business or a spouse, if any. Now, in terms of the use cases that we typically see, let's first start out with the frugal investor. So, including the tax credit, the net cost to set up and maintain a solo 401k with my solo 401k financial is $0 over the first years, over the first 7 years, because setting up our solo 401k plan will make the self-employed business eligible to claim $1,500 in solo 401k tax credits. Those are tax credits, not tax deductions. So it is a dollar for dollar reduction in their tax liability. So those tax credits will more than cover our fees for the first 7 years, because again, we charge 100% flat fees. So it's not based on the value of the account, regardless of the services needed. It's $650, which includes the $525 establishment fee, plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee that covers the second year. Another top use case is the Roth Maximizer. So with the solo 401k from my solo 401k financial, our plan not only allows for Roth employee contributions, but also allows for Roth employer contributions, as well as voluntary after-tax contributions, which is how one makes mega backdoor Roth contributions. So for 2025, individuals are going to be able to contribute up to $70,000 or even more if they're age 50 or older between Roth and mega backdoor Roth solo 401k contributions, assuming they've got the self-employment income to justify the contributions. So in order to have a plan that allows you to make those mega backdoor Roth solo 401k contributions, you need to have plan documents that support it. And of course, our plan documents automatically allow for those Roth and mega backdoor Roth solo 401k contributions. Now, in addition, another way that our clients are accumulating funds inside their Roth account is via in-plan Roth rollovers. This is where individuals are transferring pre-tax dollars that are already in their solo 401k. That could be pre-tax solo 401k contributions, or it could be pre-tax funds that were rolled over from another retirement account, such as a former employer plan or a non-Roth IRA. Then once the funds are in the pre-tax solo 401k account, they're converting them over to the Roth solo 401k. So that's just another way to accumulate funds inside the Roth account. Of course, those in-plan Roth rollovers are going to be taxable for the year of the transfer and reportable on a Form 1099-R. And we handle that 1099-R form preparation and filing under the electronic filing system as an optional free service for our customers. Customers or their advisors just have to submit the online form on our website to provide us the information we need to prepare the 1099-R. So as long as they do it in a timely fashion, we'll handle that 1099-R as an optional free service. In other words, no additional charge for the customer. The large account holder. So once the value of the solo 401k plan, including the value of any defined benefit plan that they might also have for their self-employed business, once the total value, including all sub-accounts, investments, etc., exceeds $250,000, there is an informational tax filing requirement referred to as a Form 5500EZ. So customers and their advisors just need to let us know once the value exceeds $250,000. Then we'll add their plan to the queue to prepare the 5500EZ. And we do that under the electronic filing system to make it easy for the customer. And again, we do that as an optional free service, so no additional charge. The alternative investor. So with our solo 401k plan, of course, it allows for investing in brokerage type investments, which again can be through Altruist, so stocks, bonds, mutual funds, whatever's offered by that platform. But in addition, our plan will allow for true alternative investments. So some customers may be interested in diversifying and having, for example, some of their solo 401k funds in real estate or private placements, cryptocurrency, precious metals, notes, etc. So our plan documents would also allow for those types of investments as well. So now let's turn to adding Altruist to the equation. And the way to do that is by opening up retirement trust accounts. So Altruist does offer their own solo 401k accounts, but those accounts are going to be governed by their plan documents, which are not going to allow for these advanced features. They're not going to allow for the tax credits, etc. So it's important when opening up the accounts at Altruist to not select the solo 401k account type. There's also another account type on the Altruist platform referred to as the trust account type. Altruist actually created a new account type a few years back, specifically for those customers that are bringing their own plan documents to Altruist, working with their advisors. So that customers and their advisors are setting up the solo 401k plan through my solo 401k financial, but then opening up accounts that are governed by that third-party plan open through my solo 401k financial at Altruist. So the right account type to use when you're bringing your own plan document is the retirement trust account type. So the key from a solo 401k perspective is to open up accounts under the name and EIN number of the plan. And as part of the onboarding process with my solo 401k financial, we obtain the solo 401k EIN. So this is a separate EIN number that's different than the EIN number that they may have for their self-employed business. This lets the IRS know that this EIN number is associated with a 401k plan. So in the event that there is any tax reporting done under that EIN number, now the IRS will understand that the income reported on that tax reporting could be, for example, a 1099 INT. If the customer has their solo 401k assets invested in a certificate of deposit at a bank account, the bank is going to issue a 1099 INT to report that interest income, and they'll issue that 1099 INT under the EIN number used to open up the account. So now when the IRS receives that 1099 INT, the IRS will understand that that income is growing inside of a solo 401k on a tax deferred basis. And that's why that interest income is not reported on the personal tax return or the business tax return. So when opening up those retirement trust accounts at Altruist, it's important to use that EIN number that we obtain as part of the onboarding process. And then in addition, if there's going to be either different participants, So for example, two spouses that are both working in the same business, both participating in the solo 401k, each spouse will need their own retirement trust account. And then if there's also going to be different types of funds, for example, if individuals going to be making mega backdoor Roth solo 401k contributions, they may have pre-tax funds as well as the voluntary after-tax funds and Roth funds that they have as part of that mega backdoor Roth contribution. So that means that they would need 3 accounts. And if there's 2 participants, because again, let's assume there's 2 spouses, now there's 6 accounts at Altruist, a pre-tax, a Roth, and an after-tax for each participant. And so the advisor or the client, they can simply nickname the account to help keep track. Now, when opening up a retirement trust account at Altruist, they are going to require certain information. So the plan trustee, this is the solo 401k owner, this is the client. As the self-employed business owner, they act as the trustee. The name of the plan, this is the name that would have been used as part of the establishment process on the online application with my solo 401k. The effective date of the plan. So this is going to be the date that's listed in the adoption agreement. If they're setting up a new plan here in 2025, the effective date of the plan is January 1st of 2025. If they're upgrading an pre-existing plan to our plan, let's say it's a basic plan at Fidelity or Schwab or even Altruist, then there will be the original effective date, which is when they first established the pre-existing basic plan, and then the restatement date. From a solo 401k perspective, it would be acceptable to use either date when completing that retirement trust account application on Altruist's website. The plan tax identification number. So this is the EIN number that I was just referring to that's specifically obtained for the solo 401k. The plan sponsor name. This is the name of the self-employed business. So let's assume that they have an LLC taxed as an S corp. The plan sponsor is the LLC. Let's assume that they have a sole proprietorship. They don't have a formal legal entity. In that case, it's just the name of the person as a sole proprietor. The account asset ownership, right? So these accounts, the beneficial owner of these accounts is the solo 401k participant. The solo 401k participant name, again, it's the client, it's the self-employed person. The plan type selection, it's a 401k. And then Altruist is going to require uploading certain plan documents, which we provide within the same business day when the individual first signs up. Ultimately, it's going to require working with a third-party solo 401k plan provider like my solo 401k financial. So those documents are what establish the plan, but then the accounts are opened up for that third-party plan. Once the accounts are opened up, which with Altruist, that happens very quickly based on experience and client feedback, typically same business day, then the accounts can be funded. So the funding options include an external bank account in the name of the trustee. So for example, I know that clients and their advisors are funding these accounts via the Plaid app that's on Altruist's website, or transfer from a non-retirement account at Altruist. So that would be totally acceptable as well. If the individual has an account at Altruist with non-retirement funds, they could certainly transfer from that account to make contributions. Contributions do not have to be made through payroll. So even if their business is taxed as an S corporation, they are receiving, say, payroll, right? They're receiving a W-2 from the S corporation. From a solo 401k perspective, there's no requirement to make contributions through payroll. From a solo 401k perspective, regardless of the contribution type, contributions can be made from a personal account or a business account. Tax reporting. So per Altruist, they are not doing any tax reporting for deposits or withdrawals on these retirement trust accounts, right? That's the key with opening up these retirement trust accounts, because now this communicates to Altruist that this account is just being opened up for a third-party plan. So Altruist's role is just to provide the account. It's not to police the account from a plan perspective or handle any plan tax reporting. Now, they may do trading activity reporting, like a 1099 DIV, but that's why it's important to open up the account under the EIN number for the solo 401k. So now that it's well understood that the income reported, the activity reported on that 1099 DIV is income that's accruing inside or occurring inside a 401k on a tax deferred basis. And I see we've got some good questions. We're almost done with these initial slides, and then we'll turn to the questions. So we just wanted to just take a moment to compare some of the top features with the solo 401k plan through my solo 401k financial with the basic plan that one can set up directly through Altruist. Remember, we talked about how when you go to the account type, they have specifically solo 401k account type through Altruist, but then they also have the retirement trust account type, which is specifically for those like my solo 401k clients that have the plan through a third party like my solo 401k. And that separate plan document is what enables the different features. So for example, the employer Roth contributions, the mega backdoor Roth, the compliance support for no additional charge, right, as an optional free service, the 5500 EZ, the 1099R, the ability to make alternative investments, the $1,500 in solo 401k tax credits, all the features and use cases we talked about at the beginning, those are enabled through our plan documents, but the accounts can still be at Altruist. And then, of course, some customers may want to have some of their solo 401k funds at Altruist, but maybe have additional accounts somewhere else, say to facilitate other types of investments. And that's totally acceptable. They can have some accounts for their solo 401k at Altruist and then have separate accounts somewhere else. And we are totally neutral as far as where the accounts are at. As a matter of fact, we've helped customers open up accounts at hundreds of different banks, credit unions, other brokerages, cryptocurrency exchanges, et cetera, et cetera. All right, that takes us to the end of the slides. Thanks for sticking with those. Now let's go to the questions. And if there are questions on this topic or unrelated topics, please don't hesitate to chat it over so that we can be sure to get to them all. I have a single member LLC operating as an independent RIA. As an advisor at Altruist, how would my solo 401k opening differ? Well, if you want to take advantage of the advanced features, the tax credits, etc., the process would be to first establish the plan through my solo 401k financial. So we prepare the documents within the same business day when someone signs up, and then use those documents to open up the accounts at Altruist. So for example, when someone signs up, we send out an email the same business day with a link to the secure portal where they can access the documents that were specifically drafted for their business. They just simply download those pre-filled documents, they sign, they upload the completed and signed pages via the secure upload link in the same email. And then there's a third link where they tell us where they want to have the new accounts at. And one of the options is Altruist on our drop-down menu. So then we would obtain the EIN number from the IRS. We would share that with the client and the advisor, and then the advisor can then use that EIN number to open up these retirement trust accounts at Altruist. Why is December 31st the deadline to receive the $1,500 tax credit? Would the $1,500 credit be available in 2026 if a solo 401k is opened? That's a great question. So it's a $500 per year for 3 consecutive year set of credits. So it's a total of $1,500. So if the individual wants to be able to start claiming those credits on their 2025 tax return, they would need to establish the plan in 2025. So that's why the December 31st deadline comes into play in terms of the credits. Another reason that clients are signing up by the end of the year is that preserves the ability to make all types of contributions for 2025, whether employee, employer, or voluntary after tax by the 2025 business tax return deadline, including extension next year. So there's multiple reasons to sign up by the end of the year. Yes, you would have separate retirement trust accounts for different types of funds. So the IRS system, via the IRS system, even though notwithstanding the government shutdown, the IRS online system that issues EIN numbers is still functioning. And it does function just during business hours, Monday to Friday. So generally we say one business day, just because we might be receiving information after hours or on the weekend, etc. It's not refundable, but you can carry it over to future years. Great questions. Thank you so much for bringing the good questions. We appreciate the great participation. If this information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking tells the platform that the content is valuable, which helps other solopreneurs like you find it. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. We also want to invite you to our community. We have the largest community of solopreneurs, solo 401k owners around these topics with over 30,000 members. We do have vibrant forums. There's a library of videos and webinars, and it's totally free to join. All are welcome. It's not just limited to clients. You can join quickly and easily at mysolo401k.net/my community. So please don't hesitate to join. It looks like that's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement.